In previous lecture, we have started a discussion on chapter 16, the rectification of errors. And if there are errors in previous, how we can rectify them. The error could be of two types. One type of error, there will be no difference in trial balance. There will be no difference in trial balance. So how to rectify them, we have covered in previous class. Now we are moving towards some errors against which there will be difference in a trial balance, mean debit credit side of trial balance will not tally. If debit credit side of trial balance will not tally, what we will do? We will put a suspense account. Like if debit balance is more, credit balance is less, we will put suspense account on the credit side of trial balance. And if credit is more, debit is less, we will put suspense account on debit side of the trial balance so that we should tally the trial balance. If there is any difference, we will put suspense account. And we were discussing this question. What's that question? What journals are required to correct the errors and eliminate the suspense account? What journal entries mean correct rectified entries required? What rectification entries are required to correct the errors and eliminate the suspense account? Mean we need to open the suspense account and we need to make entries first, and then we need to adjust the suspense account. So what is this question saying? On extracting a trial balance, the accountant of ETT discovered a suspense account with a debit balance of 1075. Means suspense account is having opening balance of 1075 on debit side. Means suspense account, if we open say suspense account here.
Excuse me, sir.
Yes.
Sir, is the screen still or like the camera is glitched?
Let me check what happens. My screen is not working. Yes. I think it's working now. Yeah.
Oh, yes, sir.
So what was the question? Question saying what journals are required, mean what journal entries are required to correct the errors, mean rectifying entry we need to pass, and eliminate the suspense account, mean we need to adjust the suspense account.
Okay.
So the question saying on extracting our trial balance, the accountant of ETT discovered a suspense account with a debit balance of 1075. Mean in suspense account, there is a debit balance of 1075. We can say the balance brought down
Okay.
is 1075 on debit side. It was also discovered that the debit exceed the credit by 975. And according to trial balance, the debit side is more by 977 as compared to 957 as compared to credit side. So in trial balance, whether this 957 will be on debit side or credit side. If debit is more by 957, this means credit is less.
Yes, sir.
So suspense will be on credit side.
Credit
How much
side.
amount? 957. So we will put on credit side through trial balance.
Okay.
This difference was posted to the suspense account and then investigation adjudicated the situation. The investigation revealed the following, and there are some entries that we need to adjust in the suspense account. And for rectification of entry, we have discussed in previous class, we need to prepare 3 columns. First, for the right entry, mean
Yes, sir.
what could be the right treatment according to this situation. Then we
Wrong.
need to mention what the wrong has done. And then what we need to do, we need to pass
Corrected.
the rectifying entry, mean how the error can be
Rectified.
rectified.
Yes, sir.
So number 1, a debit balance of 75 on the postage account has been. Mean there should be a debit balance of postage account of 75. So there should be debit postage expense of 75 had been incorrectly extracted on the list of balance on 750 debit. Instead of debit postage 75, what we have done wrong? We have made debit postage with the 750 instead of 75. This means this should have been done, but we have done this.
Yes, sir.
Mean we have recorded postage more.
Yes, sir.
How much more?
675.
675. So this means if we have
have to
recorded
credit it
more on debit side, how we can reduce this?
by
By
crediting postage by
crediting
675
postage with 675.
and debiting
What
suspense.
could be on the debit side then? Suspense
Suspense.
account
Because
with
we don't know how.
675. Is that fine?
Yes, sir.
Okay. Now moving towards number 2. So this is number 1. Now we are moving towards number 2. A payment of a 500 to credit supplier X. If we pay to supplier 500, what should be the right entry?
If we pay 500 to a credit supplier, so credit will be cash
Credit
500,
will be cash with how much amount? 500.
500,
And debit should
and
be
debit will be
supplier.
supplier
Supplier are payable with 500.
payable. Yes,
So
sir.
this should be the correct entry. But what we have done had been correctly entered in the cash book, mean the cash we have correctly credit, mean this they have done. But no entry had been made in the payable control account, but we haven't recorded the debit side anything.
Yes, sir.
So how we can rectify? We should
So we
debit
will debit
the what supplier
with 500 and
with
credit
500. And what should be on the credit
the
side? Because
suspense
this is
with
correctly
500.
recorded. Suspense
500.
with 500. Is that fine?
Oh, yes, sir.
Number 3. When a motor vehicle had been purchased during the year, if we purchase motor vehicle, what could be the
Yes.
accounting entry?
So
Debit motor vehicle.
yes, sir. Debit motor vehicle and credit
In
cash.
asset with how much amount? Is there amount mentioned? Yes, 1575. The credit should be cash or bank with 1575. So when a motor vehicle had been purchased during the year, the bookkeeper didn't know what to do with the debit entry, so made the accounting entries debit suspense and credit bank account. I mean, what he has done a debit suspense instead of motor vehicle with 1575 and credit cash at bank 1575. So this cash has been correctly recorded. What is
So
wrong?
we will
We
debit
should
motor vehicle
record debit motor vehicle
and credit suspense.
with 1575 and we should eliminate this suspense
Yes, sir.
with
With 1575.
1575. Is that fine?
Oh, yes, sir.
So this has been done. Number 4. A credit balance of 81 in the sundry income account. Mean there should be credit sundry income of 81. What we have done? Incorrectly extracted on the list of balance as a debit balance. Mean instead of recording a credit sundry income, we have recorded debit sundry income with 81. What could be on the other side? Forget about it. Instead of recording credit sundry income with 81, we have recorded debit sundry income of 81.
Debits and
So how we can rectify? We need
so
to
we have to
credit
credit the double amount,
sundry income with double amount
162.
162. So what should be on the debit side then?
The suspense.
Suspense account with 162.
Yes, sir.
Is that fine?
Oh, yes, sir.
Now we are moving towards number 5. What is number 5? A receipt of a 5 from a credit customer. If we receive from a credit customer, what could be the entry?
Sir, if you
Debit
receive,
cash 5 and
yes, sir.
credit customer are receivable with a 5.
Yes, sir.
Now see what we have done. A receipt of 5 from credit customer Y had been correctly posted to the receivable account. Mean we have credited the customer mean receivable account with the 5, that's fine. But had been entered in the cash book as a 625, mean we have debited the cash with the 625 instead of 5. So
Yes,
the
sir.
customer receivable is accurate. Where is wrong? Instead of debiting the cash by 5, we have debited is by 625.
625.
Mean how much more we have recorded cash?
So we will credit cash by 620
So we will credit cash by 620 and we
and
will
debit
debit what?
suspense.
Suspense account with the 620.
Oh, yes, sir.
Now we are moving towards number 6. The bookkeeper was not able to deal with the receipt of a 500 from the owner's own bank account. If we are receiving a 500 from the owner into the business, what could be the correct entry?
If we are, sir, debit cash.
Debit with the
Yes, sir.
500 and credit equity or capital.
Okay. Equity.
Because owner giving money to the business and any money coming from the owners,
Yes, sir.
we
Is
credit to equity or capital.
Yes, sir.
So this should be the correct entry. So the bookkeeper was not able to deal with the receipt of 500 from the owner's own bank account, meaning from his personal bank account, we are taking 500. And made the accounting entries debit bank and credit suspense. Mean he has recorded the entry debit cash or bank with the 500 and credit suspense account with the 500. Mean this has been correctly recorded. So equity is not recorded. So we will credit equity with 500.
500.
What should be on the debit side to
Suspense.
eliminate this suspense with 500. Is that fine?
Oh, yes, sir.
Now moving towards number 7. Number 7. No entry had been made for a check of 120 received from a credit customer M. What could be the entry? Debit, cash or bank?
Debit cash.
Cash or bank with 120 and credit
The
customer
receivable.
M 120 are receivable.
Yes,
There
sir.
is no entry. So we need to record this entry to rectify
We will only
debit
record in
bank
the right one.
120 and credit
Credit.
receivable or customer M with 120. So there is no
Yes, sir.
suspense account.
Yes, sir.
And number 8. A receipt of 50 from a credit customer. What could be the entry? Debit cash.
Debit cash.
How
and
much amount? 50.
50.
And credit receivable
Receivable.
with 50. A receipt of 50 from a credit customer N had been entered into the receivable control account as a 5 and into the cash book as a 5. Mean instead of 50, we have recorded debit cash with the 5 and credit receivable with the 5. So what could be the correct entry? We have
Sir,
recorded correct, but with lesser
we have
amount.
to same entry but with 45.
Yeah, debit cash with 45 and credit receivables
Sir, I have a
with
question.
45. Yeah,
Sir, is receivable account and receivable control account the same?
is the same. Treat it same right now.
Okay.
So there will be no suspense.
Yes, sir.
So
No
now
suspense.
we can adjust our suspense account. So in number one, there is a suspense account 675 debit. So we can record 675 debit against postage. Number one. This is done. In number two, suspense account is credited with 500 against supplier. So 500 against supplier. Number two, this is done. In number three, suspense account is credited with 1575. So 1575 against what? Motor vehicles. Number three. So this is also done. Let me make some space over there. Yeah. So in number four, suspense account is debited with 162 against sundry income. 162 against sundry income. Number four, done. In number five, suspense account is debited with 620 against cash. So we'll debit 620 against cash from number five. And number six, suspense account is debit of 500 against equity. So debit of 500 against equity in number six. So this is done. In number seven, there is no suspense account. In number eight, there is no suspense account. Now, if we tally the suspense account, see the difference has been adjusted. What's the total on both sides? Check the total. Is that 3032 on both sides?
Yes, sir. 303.
This means we have done this question correct because the suspense account we have adjusted. That was the requirement. What journals are required to correct the errors? Mean these correcting entries we need to record and eliminate the suspense account. So we have eliminated the suspense account balance.
Oh, yes, sir.
Okay, now moving forward. Question understanding 3. The debit side of an entity's an entity's trial balance total 1200 more than the credit side. This means in trial balance, if a debit side is more by 1200, so where should be the suspense account? Is that on debit side or credit side? If debit side is more, mean credit is less, this means there is 1200 on credit side of trial balance.
Credit side.
Which of the following errors would fully account for the difference? In how we can eliminate this 1200 difference. The petty cash balance of 1200 has been omitted from the trial balance. If petty cash is an asset, liability, expense, or income. What is petty cash? It's asset. And assets balance is normally debit. If they are omitted from debit side, so by recording this 1200 on the debit side, this will further increase the suspense by 1200. You know?
Oh, yes, sir.
Saying the petty cash has been omitted from the debit side. This means if we rectify the entry petty cash debit suspense credit with the 1200, this suspense account will be increased more. So this is not the correct option because it will increase the suspense more rather than eliminating this 1200. Can you understand this?
Oh, yes, sir.
Part B, a receipt of 1200 from commission receivable. Commission receivable. What is a receivable? Again, asset. Has been omitted from the record. Obviously, if we record it as a receivable debit, what will be the credit suspense account? This will also increase the suspense account rather than eliminating it. This is also not the correct option. Mean the same. A and B both are having assets. If we record the asset, then suspense will be increased through rectifying entry. Part C, 600 paid for plant maintenance has been correctly entered into the cash book and credited to the plant cost account. Mean what should be the correct entry? The correct entry should be maintenance expense debit with the 600 and cash credit with the 600. What we have done wrong has been correctly entered into the cash book. Mean the cash we have correctly credited and credited to the plant cost account, and we have also credited to the plant cost account. So 600 paid for plant maintenance has been correctly entered into the cash book and credited to the plant cost account. Instead of this entry, what we have done, we have recorded credit cash 600 accurate, and we have credit plant cost account 600. So what should be the correct entry? We should record debit maintenance expense with 600. This has been correctly recorded. This plant we should, if it has been credited, we will debit it against to eliminate it 600. And what should be on the credit side? Suspense account with 1200. This will further increase the suspense account rather than eliminating this 1200. So this is not the correct option. Can you understand this? I mean, there was maintenance expense of 600. The correct entry should be this, but we
Yes,
have
sir.
recorded the cash 600 accurately. Instead of debiting maintenance, we have credited the plant with 600. So if we pass the rectify entry, how we can pass the rectify entry? This should be on the debit side, and this plant credit should be eliminated by debiting it. So if both are debit, what could be the credit side? Suspense 1200. And this 1200 will further add to this towards 2400 rather than eliminating this. So what is D? Return outwards. What is meant by return outwards? Mean we are making return out from the business, whether these are purchase return or sale return.
Sir, purchase return.
Purchase return. What is the entry for purchase return?
Sir, debit, purchase
Debit
return.
or supplier or payable, and credit,
Yes, sir, credit,
purchase return.
purchase return.
Return outward to credit supplier of 600. Mean this should be the entry. Has been debited to purchase a inward account. Has been debited to purchase inward account. Mean we have recorded debit sale return with 600. We
Sir, I
have
have a
recorded
question.
debits. Yes.
Sir, why is it debit supply and credit purchase return? Why did we debit suppliers?
Normally, the purchase return entry is a supplier debit and a purchase return credit, because when we purchase, the entry is purchase debit, supplier credit. At the time
Yes,
of
sir.
purchase, we make the entry purchases debit, supplier credit. So in return, we reverse the entry supplier debit to whom we are returning supplier.
Yes, sir.
We will eliminate that liability, reduce that liability, and purchase return will be credited. Mean reversal of purchase entry. So this should be
Yes, sir.
the right entry. What we have done had been debited to the return inward account. We have debited to the return inward account. How we can correct it? We should credit this purchase return with 600, and we should eliminate this sale return that we have wrongly recorded by crediting sale return 600. So what should be on the debit side? What should be on the debit side? Suspense account with 1200.
Suspense account.
So if we record suspense on the debit side here, 1200, so this will be eliminated. You know?
Yes, sir.
Mean these two entries should be on this credit side instead of 1200. So this suspense will be eliminated. Is that fine?
Oh, yes, sir.
Instead of 1200, there should be credit purchase return with 600 and credit sale return with 600. So by passing this entry, we can eliminate the suspense account. In both debit credit side of trial balance will be 10. So this was a little bit tricky questions. So moving forward, test your understanding 4. What we need to do, which of the errors will require an entry to the suspense account to correct them? What entries are required to correct the suspense account balance? Bonds trial balance failed to agree and a suspense account was opened for the difference. Bond doesn't maintain control account for sales and purchases, and the following errors were found in bonds accounting records. Number 1, in recording the sales of a non-current asset, cash received of 33,000 was credited to the disposal account as 30,000. What is the normal entry of asset disposal? Debit cash and credit disposal. How much is the amount? 33,000. What they have done? In recording the sale of non-current asset, cash received of 33,000 was credited to disposal account as 30,000. Instead of this, we have recorded cash accurate with 33,000, and in disposal we have recorded 30,000 instead of 33,000. So what is the correcting entry? We need to record credit disposal more with 3,000. So what should be on the debit side? Suspense with the 3,000. So through this, we can rectify the suspense account. Yes, there is a suspense involved. We need to identify those entries where suspense account is involved. Which of the error will require an entry to suspense account to correct them? Where suspense account is involved, we need to identify those entries. An opening accrual of 340 had been omitted. If opening accrual is omitted, this means we need to record accruals on credit side 340. So what will be on the debit side? Suspense account in this suspense is involved. So if in 1 and 2 suspense is involved, is that option A correct or wrong?
Oh, yes, sir.
Option A correct or wrong? Because suspense is involved in 1 and 2, and we need to identify where suspense is involved. So option A is not saying option 2, so this will be the wrong option. Even option C will be the wrong option.
So option
even
3,
option D will be the wrong
D.
option. So what will be the correct option? B. We don't need to even read 3 and 4. Because in 1 and 2, if we have identified suspenses involved, and there is no other option except B where 1 and 2 both are included. Because according to option A, only 1, 3, and 4, no, even in 2 suspense account is involved. C is saying 1 and 4, no, even in 2 suspense account is involved. And D is saying 2 and 3, no, even in 1 suspense account is involved. So all of the above. And you can identify suspense account is involved in these two as well. Shall we move forward?
Yes, sir.
Okay, adjustment to profit. Sometimes examiner ask us to identify correct profit. Sometimes examiner ask us to identify correct profit. How we can identify corrected profit and loss? There is a formula. We need to check what was the opening profit. Income will increase the profit or decrease the profit. There are 4 account head: assets, liabilities, income, expenses. So assets and liabilities having no link with the profit. Only income and expenses are having a link with the profit, whether income will increase profit or decrease profit.
Income will
increase profit or decrease profit?
decrease profit.
How income is decreasing profit? If you are earning income, that will decrease your profit or increase your profit. If you are earning incomes, your profit will be increased or decreased.
So in decrease.
If you are earning more and more, mean you are getting more and more income.
Like from the profit, it will be deducted.
Incomes always increase your profit. Income mean earning. Profit mean earning.
Oh,
if you are
okay.
earning more, you will be having more profit. If you are spending more, your profit will be goes down.
Okay.
So in opening profit, we need to add incomes and we need to subtract expenses. We will arrive at corrected profit. Mean what happened at the year end? There are some adjustment at the year end that we need to adjust with the profit. And the adjustments relating to income and expenses only we need to adjust with the profit. Because assets and liabilities are balance sheet item. They will not be adjusted to profit. So only income and expenses will be adjusted to profit. How? All income should be added to the profit, opening profit, and all expenditure should be deducting from the opening profit, and we will arrive at corrected profit. So just memorize this formula. I mean, how we can identify corrected profit. In opening profit, we need to add all incomes and we need to subtract all expenses. We will arrive at corrected profit. There is a question. Test your understanding 5. He's asking what is the revised profit figure? You need to identify corrected profit. The following correction journals have been posted by Boris, a self-employed 1, 2, 3, 4, 5. And Boris' draft profit figure prior to the posting of these journal is 355. This is the opening profit. Prior mean opening profit is what? 3 5,000. Now from these entries, we need to identify income and expenses, and income should be added and expenses should be deducted to arrive at the corrected profit.
Yes, sir.
So number one entry, suspense account debit rent credit. This rent is what?
Expense.
What is the nature of expense?
So debit
Asset
and expenses are debits.
and expenses in nature are debit. Asset and expense nature is debit, and income and liabilities nature is credit. If this rent is on credit side, whether it
Oh.
is income or expense,
So it will be, I think, income.
income, because it's showing a credit balance. So
Okay,
whether
you're
we
getting
need
rent.
to add income or subtract income.
So we will add income.
Add rent income, how much is
$4,000.
4,000.
Yes, sir.
Now, payable suspense. Is there any income or expense involved?
Payables.
Yeah. What is payable?
So payable, we need to
What is
liability.
payable? Is that income, expense, asset, or liability? What is
So it's
payable?
liability.
It's liability, so it's having no link with the profit.
Yes, sir.
Only expenses and income will be having link with the profit.
Okay.
So we'll do nothing regarding this with adjustment of profit.
Okay.
Okay, loan interest, debit, and loan credit. What is loan interest?
So it's expense.
It's expense. And what is loan?
So it's a liability.
Liability. So this expense, loan interest, we need to add or subtract.
So we will subtract.
Subtract 1,000. Suspense debit sundry income credit. So this is income. So
Yes, sir.
sundry income, we will add or subtract.
So we will add because it's income.
Add 650. Suspense debit cash credit. What is cash?
So income because it's in credit. Oh, sorry.
What is cash?
It's asset. Yes, sir, asset.
So it will be having no effect. So what is the corrected profit? Can you identify?
Yes, sir. So corrected profit will be 3,358. So 358, 650.
What is the option?
So it's option number B. Option B.
Is that fine?
Oh, sir, I have a question regarding that question.
Yes.
I have a doubt. Sir, in the last, the fifth one, sir, like when we get cash sometimes, sir, how do we know that it's
In this
like-
entry, can you identify what is mentioned?
last
What
one?
is
It's
cash? Where we record the cash in financial statements? Under
Asset.
asset. So this is asset.
okay.
If
So
we
if
are paying a cash against any expense and there is expense in debit side, then we will call, okay, this is expense. Itself,
Okay.
what is cash? It's asset.
Okay. And if there is like we are getting cash, so it will be in another like name. Like if you are
Yeah,
getting loan,
obviously the other account balance will be either expense or income.
if like the rent, it's cash on or bank only, but it's
Exactly,
like
the
named.
other item will be either income or something like that. Cash
Okay.
itself is asset.
Okay. Yes, sir.
Okay, the chapter has completed. Now we are moving towards next very important chapter, chapter 17, from where you will get a 15 marks question in your paper. Or you will find 2 to 3 MCQs from this chapter as well. I mean, highly important chapter. But this chapter 50 marks question will take a lot of time in the paper. That's why The question, long question from this chapter should be attempted at end of the paper. Because the question will be a bit longer, in which we need to prepare profit and loss account, we need to prepare statement of financial position, or we need to prepare might be statement of changes in equity as well. In this chapter, we will learn how to prepare financial statements, mean how to prepare profit and loss account, how to prepare statement of financial position, mean balance sheet, how to prepare statement of changes in equity, preparing basic financial statements. So what we do, we have learned, first we record the entry in journal. For every transaction, we record the entry in journal. From journal, we post the entry to ledgers. Then what we need to do, we need to balance the ledger, mean finding the closing figure of ledger. And from ledger, we put the figures in trial balance. From trial balance, we put the figure in financial statements. And financial statements is the final outcome of accounting. And what are financial statements? We have discussed earlier, there are 5 components of financial statements. Statement of comprehensive income, also called statement of profit and loss account. Statement of financial position, balance sheet. Statement of changes in equity. Statement of cash flows and notes to the accounts. So these are the 5 components of financial statements that we need to prepare after trial balance. You can say after trial balance, there could be some adjusting entries. After trial balance, there could be some adjusting entries. So after trial balance, there could be some adjusting entries, year-end adjusting entries. And year-end adjustments, and then we will prepare financial statements. So for every transaction, we need to record journal entry first. From journal entries, we need to post the entry into ledgers. Mean for each account balance, we need to open its ledger. Then at the end, we need to balance the ledger. Mean we need to identify the balancing figure. If it is on debit, we will record on the debit side of trial balance. If the balance is credit, we will record on the credit side of trial balance. And then we need to adjust some entries at the year end. What could be those entries we will learn in this chapter. And then we will prepare financial statements. How we will prepare financial statements? First of all, we need to prepare statement of profit and loss account. Then we need to prepare statement of changes in equity. Then we can prepare statement of financial position. And then we can prepare statement of cash flow and notes to the accounts. But first, we need to prepare statement of profit and loss account, also called statement of comprehensive income. Statement of profit and loss, also called statement of comprehensive income. How they look like, we're gonna study now. So from trial balance, we will make some adjustment at the year end. Then we will prepare financial statements. What are the financial statements? Statement of financial position, mean balance sheet. Statement of profit and loss account, and other comprehensive income. How to prepare other comprehensive income, we will learn. And then we can say we need to prepare statement of cash flow, statement of changes in equity, which are not mentioned here, and notes to the accounts, mean disclosures. So transaction recorded into ledgers. Ledgers is balanced off. The extracted balances from ledger will be recorded into trial balance, then year-end adjustment, then we will prepare financial statement. What could be the adjusting entries after trial balance? The adjusting entries could be relating to closing inventory, could be relating to depreciation for the year, could be relating to accruals and prepayments, could be relating to irrecoverable debt or allowances for receivable, are relating to income tax, are relating to provision contingent liabilities, or even after the reporting date. This we have studied. 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 And this we're gonna study in this chapter. What is the entry of closing inventory? We have discussed debit inventory, credit also inventory. But this debit will go into the asset in balance sheet. This credit will go into the profit and loss account, means should be deducted from cost of sale. What is the entry of depreciation? Debit, depreciation expense, and credit, accumulated depreciation. We have studied this. Depreciation expense will go into profit and loss account, and this accumulated depreciation we will deduct from the asset in statement of financial position in balance sheet. What is the accounting entry for accruals? Debit, expense, and credit, accrued expense, accruals. This expense will go into profit and loss account, and this accruals liability will go into statement of financial position. What is the entry of prepayments? Debit, prepaid expense, prepayments, and credit expense. And these prepaid expenses will be recorded as asset in statement of financial position, and this expense will be credited from P&L. What is the entry of irrecoverable debt? Debit, irrecoverable debt, mean confirmed bad debts, and credit receivable. This irrecoverable debt will be recorded as expense in P&L, and the receivable should be deducted in asset side of statement of financial position. And what is the entry for allowance for receivable? Debit, again irrecoverable debt, and credit allowance for receivable. This irrecoverable debt will go as expense in profit and loss account. This allowance for receivable will be deducted from receivable in statement of financial position. How? We will discuss today. And regarding income tax, the current year tax, we record entry debit, tax expense, credit, tax payable. So expense will go into profit and loss account, and tax payable is a liability will go into statement of financial position. And we have discussed the current year tax, how we calculate the current year tax. We need to see what is the provision for current year. In that provision, we have to add under provision, and we have to deduct over provision relating to previous year. We will be having the profit and loss account figure. On liability side, we will record the current year provision only, current year tax. But in P&L, the current year tax provision, if there is any under provision, we will add. If there is any over provision, we will subtract. And this under over provision is relating to previous year provision. mean if the previous year provision was 100,000, but we have paid for that 110,000, this means that provision was under provision. So we need to add that 10,000 extra in current year tax. We have discussed these things already. And what is the accounting entry for provisions and contingent liability expense debit, provision liability credit, and contingent liability? There is no accounting entry we need to disclose. In this chapter, we will be having a revision of a previous 5-6 chapters. We have covered one complete chapter on closing inventory. We have covered one complete chapter on asset depreciation. We have covered a chapter on accruals prepayments. We have covered a chapter on bad debts. We have covered chapter on taxation. And we have covered chapter on provision. These events after reporting date is left that we will cover in this chapter. So let's move forward. He has mentioned what could be the entry of closing inventory debit, cost of sale, credit or inventory credit that will be deducted from cost of sale. Depreciation expense debit, cumulative depreciation credit for the depreciation. Accruals expense debit, accruals liability credit. For prepayments, prepaid expense debit and expenses credit. For irrecoverable debt debit, receivable credit. For allowance for receivable, irrecoverable debt debit, allowance for receivable is credit. And they have recorded all the entries that we already know. What are the 5 components of financial statement? Statement of financial position, balance sheet, statement of profit or loss account, statement of other comprehensive income, and these 2 things we prepare combined. How we prepare statement of profit and loss account and other comprehensive income we will discuss. Statement of changes in equity, notes to the accounts, and statement of financial cash flow mean number 1, number 2, number 3, number 4, and number 5. These are the components of financial statements. How we prepare balance sheet? We prepare balance sheet. First, we put the heading statement of financial position for the year ended 31st December. We can make 2 lines. Mean in first line, we will mention this. And in second line, we will mention for the year ended 31st December 2023. We start with the assets first. And we record non-current asset first, like property, plant and equipment, investment, intangibles, and we make their total here. And then we record current assets, inventory, trade receivables, prepayments, cash, and we'll make their total here, and we calculate total assets. And this total assets figure should be equal to equity plus liabilities. Then we will record equity and liabilities, meaning we will put a heading equity and liabilities. So we will start with equity first. What are the components of equity? Share capital, irredeemable upfront shares, share premium, revaluation surplus, and retained earning, and their total. Then we will record non-current liabilities.
Oh, so
Non-current liabilities like loan, debentures. Then we will record current liabilities like trade payables, overdraft, tax payable, and their total. And this is the total for equity and liabilities that should be equal to the total of total assets. Mean these 2 figures should tally with each other. So this is the format of balance sheet, statement of financial position. First we record asset. How? The priority is non-current assets first and then current assets. We need to make their total. And then second side of balance sheet is equity and the liabilities, and we will record equity first, then non-current liabilities, then current liabilities and their total. that should be equal to total assets, because assets are always equal to equity plus liabilities. What are the current assets? Those assets that will provide us benefit within 12 months are called current assets, and those assets that will provide benefit in more than 12 months are called non-current
Non-current
assets.
assets.
Current liabilities that we need to settle within 12 months are current liabilities. And liabilities that we need to settle mean we need to pay in more than 12 months, that will be called non-current liabilities.
Oh, yes, sir.
How we prepare statement of profit or loss account? First, we record revenue means sales. From sale, we deduct cost of sales. We will arrive at gross profit. From gross profit, we deduct distribution cost. We can say selling and distribution cost. We deduct admin expenses, including advertising, including wages, including bad debts. We will arrive at profit from operations. In profit from operation, we add other income. Investment income, or we can say these are other income, mean income other than sale of inventory. Like we have rented out a property, we are receiving a rent, that is other income. We have invested in any company shares, we are receiving a dividend, that will be called other income. We have deposited some extra money into a saving account and we are receiving interest, that will be called other income. And then we will deduct the finance cost. What is finance cost? Interest expense. So we will arrive at profit before tax. And from this, we will deduct the tax expense and we will arrive at net profit for the year. How this tax we can calculate? In current year provision for tax, we need to add under provision of previous year. And we need to deduct over provision of a previous year, then we will arrive at profit and loss figure of tax. Mean how we calculate this tax figure. Provision for the current year, mean current year tax, add under provision that is coming from previous year, or if there is over provision, we will subtract and we will arrive at current year profit and loss figure of tax. But in balance sheet, we will record only this figure as a liability. But in PL, we have to adjust under our over premium. So this is profit for the year. If we are preparing profit and loss account and other comprehensive income, from here we will put a heading other comprehensive income. If there is any other comprehensive income, like there is any revaluation surplus during the year, so we will record here and then we will tally and we will record, call it total comprehensive income. So like this, we can prepare profit and loss account and other comprehensive income. Mean just normal calculate the profit and then put a heading other comprehensive income. If there is any other comprehensive income like a revaluation surplus, we will add and we will calculate total comprehensive income. This profit figure will go into retained earning in the balance sheet. Not in the balance sheet. In fact, this will go to statement of changes in equity. This profit figure will go into statement of changes in equity. How to prepare statement of changes in equity, we will discuss today. So we have learned how to prepare balance sheet and how to prepare profit and loss account and other comprehensive income. So we will call it statement of profit and loss and other comprehensive income. This will be the complete income. Is that fine? He has
Yes, sir.
prepared. He has prepared here, like revenue less cost of sale, GP less distribution expense, admin expenses, profit from operation, other income, finance charge, mean interest, profit before tax minus tax is equal to profit. And then other comprehensive income, like if there is any gain or loss on property or revaluation, we will add, subtract, and we will arrive at total comprehensive income. So we can prepare combine, or we can prepare these other comprehensive income separate. So both treatment are acceptable. Obviously, other comprehensive income will start from the profit figure. In financial statement, we need to provide some disclosures separate. We need to mention these figures separate in the financial statement. What are the disclosures required? Restructuring or reorganization of the company, like revaluation. So if there is any revaluation gain or loss, we need to mention it separate. We need to provide disclosure in notes of the accounts for this. Profit or loss on disposal of property, plant and equipment. If we have disposed, means sold any asset during the year, and the gain or loss on that asset disposal means sold, we have to disclose it separately. Even in income statement, we have to mention it separate. Impairment of inventory, plant or asset mean if there is any impairment of any asset. Impairment mean loss in value of any asset. So we need to provide disclosure for that loss, and we need to mention that loss in profit and loss account separate. So these three things we need to disclose separate in the financial statement. Restructuring or reorganization, gain or loss on disposal of assets, and impairment of asset. Now we are moving towards our question. Before moving to a question, we should know about the format of statement of changes in equity. There are 5 columns involved in statement of changes in equity. One is relating to share capital. Other is relating to share premium. What is share premium? We have discussed this. If we have issued a share above a par value, the value above a par will be credited to share premium account.
Yes, sir.
Revaluation surplus in case of revaluation, and retained earnings. And then the total column. We need to record their opening balance, mean balance at start of the year for 4. If we have issued any share during the year above a par value, then with the par value, the amount will be written here, and the above a par value will be recorded under share premium account. If there is any revaluation surplus, we will record in revaluation surplus only. The profit we calculated through profit and loss account will be added to retained earning. If that will be a loss, so that will be deducted. And any dividend paid during the year, we will record by deducting from retained earnings. And then we make total of all 4 columns, and these totals will go into statement of financial position in equity heading. Like this total will be for share capital, this for share premium, this for revaluation reserve, and this for retained earning. How to calculate this? We will attempt a question today. So let's move straight forward towards our question. Yeah, we have this question. what we need to do from this question, we need to prepare a statement of profit or loss and other comprehensive income for the year ended 31st December 2025 and a statement of financial position. Mean we need to prepare balance sheet and we need to prepare profit and loss and other comprehensive income. So two things we need to prepare: statement of profit and loss and other comprehensive income. And we need to prepare statement of financial position, mean balance sheet. How we can prepare this? Just put two long pages, one for statement of profit and loss and other comprehensive income. For the year ended 31st December, for the year ended 31st December, what's the date? 20x5. For the year ended 31st December 20x5. So leave this page and then here we will prepare balance sheet. So we will call it statement of financial position. For the year ended 31st December 20x5. And in balance sheet, we know first we need to record the assets, non-current assets, then we need to record the current assets, then there will be total, and then we put the heading equity and liabilities. We need to mention equity. Then we need to mention non-current liabilities. Then we need to mention current liabilities. And then there will be total. And for income statement, we need to start with sales revenue. Then we need to deduct cost of sale to arrive at GP, gross profit. Then by deducting expenses, we will arrive at profit and then other comprehensive income. So we are going to prepare statement of profit and loss account at the comprehensive income and statement of financial position, mean balance sheet. So the trial balance of Crown Company as at 31st December 20x5 was as follows. Ordinary share capital, where this will go under equity in the balance sheet.
Oh, yes, sir.
Sale and purchases. What is the sale? What is the purchase figure? Can you identify the sale figure and purchase figure?
So sales is 266 and purchase is 365.
I'll kill you. What is sale? What is purchase? Purchase is expense or income or asset or liability.
So purchases are
Expense.
expense because cash is going.
Expense nature is debit or credit.
Yes, sir, debit. So 266.
266 will be our purchases.
Yes, I thought they were written like in the respective.
No. You need to identify whether this figure is debit or credit. Sales nature is credit because sale is income.
Yes, sir.
Inventory at 1st January 20x5. This is opening inventory.
Yes, sir. Opening inventory.
We will record this under cost of sale. Returns. Whether the 1200 is a sale return or purchase return.
Sir, 1200, I think it's
Reversal of sale. If sale is credit, his return will be
sales return,
debit, and this is reversal of
Purchase return.
purchase. This is purchase return.
purchase return.
We will deduct from sale figure and purchase figure. What is wages?
Wages are expenses.
Expenses.
Because
Rent.
your expense.
On the debit side, expense. Motor
Yes, sir.
expenses.
Expenses.
Expense. Insurance.
Expense.
Expense. Irrecoverable debt. Mean confirm
yes, sir.
bad debts. Expense.
Expense.
Allowance for receivable at 1st January 20x5 mean this is the opening balance of allowance for receivable. What to do with this we will discuss later.
Okay.
Sundry income mean other income.
Okay.
Other than sale. Light and
Sundry
heat.
income,
Light and heat
expense.
mean expense. Bank overdraft interest.
Expense.
Expense. Motor vehicle at cost fixed
Uh,
asset.
Fixed asset.
And its accumulated depreciation balance is 12240 opening balance. Fixture and fittings at cost.
Expense.
Asset, now asset.
Okay. Asset.
Motor vehicle is asset, fixture and fitting is asset, and its
Okay.
accumulated depreciation balance is this. Land is also non-current asset. Receivable and payables. What is receivable? What is payable?
Sir, payables is our payables is our liability and receivable is our asset. So as the receivable is 17,330.
Yeah, these are the receivable asset, and this is the credit balance of liability payables.
Yes, sir.
This is bank mean current asset.
Yes, sir.
Income tax under provision.
Income tax under provision.
That we
So-
need to add with the current year figure, current year provision figure.
Yes, sir. So it's
It is relating to previous year under
yes, sir.
provision. Building at cost,
Asset.
asset 100,000 and its accumulated depreciation and retained earning opening balance. Retained earning opening balance.
Opening balance.
And the trial balance figures tally. And there are some
Yes, sir.
adjustments. Closing inventory figure is a 25680.
Okay.
That should be deducted from cost of sale and should be recorded as asset, current asset in the balance sheet. Is that fine?
Yes, sir.
There should be two effects of these entries. Closing inventory should be deducted from cost of sale and should be recorded as current asset in balance sheet. Rent was prepaid by 1000. Mean we need to record entry for this. What could be the entry? Prepaid rent debit, rent expense credit. This means we need to record this as current asset in the balance sheet. And we need to deduct this from rent expense. Can you identify this? And for this, the entry will be debit prepayments with 1000 that will be recorded as asset and credit rent expense with 1000 mean this should be deducted from rent expense in the profit and loss account. And light and heat OFD was 460 at 31st December. What is mean by this? OFD was 460. Light and heat OFD means still we need to pay 460 mean accruals. So debit light and heat with 460 and credit accruals 460. This 460 will be added to light and heat that we have identified here. Light and heat 3074. So this 460 will be added in P&L to that figure, and 460 accruals current liability should be recorded in the balance sheet. Can you understand two effects of each accounting entry?
Oh, yes, sir.
Land is to be revalued by 250,000. What is the land figure in here? 100,000. This means in balance sheet, we need to record land by 250,000. What was the balance? 100,000. If its new amount is 250, so what is a revaluation surplus? What is a revaluation surplus? 150,000. That should be recorded in other comprehensive income. And we will record land in the balance sheet by the amount 250 rather than this 100,000. Instead of 100,000, we will record land with 250 because it has been revalued, means value has gone up to 250. So what is the revaluation gain surplus? 250 minus 100 is 150. That should be recorded under other comprehensive income. Is that fine?
No.
Following a final review of the receivable at 31st December 20x5, Crown Company decided to write off an other debt of 130. We need to write off an other debt of 130, mean these are the bad debts. Irrecoverable debt, debit, receivable, credit. For this, we need to record an entry. Debit, irrecoverable debt 130, credit, receivable 130, mean this should be recorded as expense in the balance sheet, profit and loss account, and should be deducted from receivable from current asset. And the entity also adjusted the allowance for receivable to 516. Adjusted the allowance for receivable to 516. What was the allowance for receivable balance opening? There was opening balance of allowance for receivable that was a 588. Now it's saying the receivable balance is allowance for receivable balance is a 516. So from 588, it has become a 516, reduced or increased? Is reduced by how much amount? 72 negative. So we will record the entry against it. Mean this 72 should be deducted from recoverable debt in profit and loss account. So 588 minus 516 is equal to 72. So this should be deducted from profit and loss account, irrecoverable debt. And this 516, the closing balance should be deducted from receivable in the balance sheet. Mean there will be two treatment of this allowance. The negative 72 figures will be deducted from profit and loss account. But this closing balance should be deducted from receivables in balance sheet. For this bad debts, they should be recorded as expense in profit and loss account as irrecoverable debt and should be deducted from receivables because the entry is irrecoverable debt debit, receivable credit. But for this 516, the accounting entry is debit, irrecoverable debt, and credit allowance for receivable with how much amount? With 72 amount. And this 72 is negative rather than positive. That's why we will deduct this 72 from irrecoverable debt. We will deduct this 72 from irrecoverable debt. And we will deduct this 516 closing balance of allowance from receivables in balance sheet. From receivables in balance sheet. And then Crown Company estimated that the income tax charge on profit for the year 7300 mean current year provision is 7300. So we need to add under provision and we need to subtract over provision for current year tax expense in profit and loss account. But in balance sheet tax payable, we will record this for the current year amount only. And then there is depreciation on building. We need to calculate depreciation on 2% straight line basis, mean cost divided into 2%. Fixture and fittings straight line method, assuming a useful life of 5 years, mean cost divided by 5 years, we will calculate depreciation. And motor vehicles 30% annually on reducing balance basis, mean on written down value, we need to charge 30% to calculate depreciation of motor vehicle. So these are the rate for depreciation of three kind of assets: building, fixture and fittings, and motor vehicles. A full year depreciation is charged in the year of acquisition and none in the year of disposal, and there is no disposal, so ignore this line. So now we are going to prepare statement of profit and loss and other comprehensive income and statement of financial position. First, shall we move towards statement of profit and loss account and other comprehensive income? We have figures for sale and we need to calculate cost of sale. Here we have prepared our pro forma. Here is a pro forma. Here. So for statement of profit and loss account, sales revenue first. What is the figure for sales revenue? Is 365,200, but we need to subtract a sale return of 1200. 365,200. 365,200. So 365,200, but we need to subtract 1200 for sale return. So what is the figure, final figure? 364,000. 364,000. And we need to subtract cost of sale. And for cost of sale, we are going towards our working one to calculate cost of sales. How we can calculate cost of sales? There are opening inventory available in the question. What is the opening inventory? Can I start working one here?
Yes.
For cost of sale. So opening inventory, what is the opening inventory? 23340.
23340.
Plus purchases. What is the figure for purchases?
So
266,800.
266,800. Yes.
And we need to deduct a purchase return. What is the purchase return? 1,600. And then we need to deduct closing inventory. What is the figure for closing inventory? It's available. 25680.
25680.
So 25680. We need to deduct. If there are any direct expenses, we need to add as well. But in this question, there are no direct expenses. Can you calculate cost of sale for me, please?
Yes, sir. So
I need a calculator in your hand and be quick.
yes, sir. So it's 2, 3. Sir, 262, 860.
262,860. So 262,860, we have calculated our cost of sale 262,860. So we will arrive at a gross profit. Can you provide me the figure for gross profit, please? $101,140. And from gross profit, we need to deduct selling and distribution expense.
Yes, sir.
And we need to deduct administration expense. I think in this question, there are no selling and distribution expenses, but there are some administration expenses. For administration expenses, we can prepare working tool so that we can just subtract the complete figure. And for working tool, can we open working tool here? Working tool for admin expenses. What are the admin expenses? Wages. What's the amount?
Yes.
46160. Rent. What's the amount? 13,000. Motor expenses. What's the amount? 3720. Insurance. What's the figure? 760. And then we have light and heat, irrecoverable debt.
So the screen is.
Screen is not showing.
No, sir, it's still. I think it got stuck.
Let me check. Let me check. I think it's fine now.
Yes, sir.
So we have recorded wages. We have recorded rent. We have recorded. So whatever the figures we have recorded, we should cross it. Inventory, we have recorded these. We have recorded wages. We have recorded rent. We have recorded motor expense. We have recorded insurance. 760 we have recorded. And then we are having light and heat 3075. Light and heat 3074. And then we are having irrecoverable debt. Irrecoverable debt. And we need to calculate irrecoverable debt. What's the figure here? 984.
Yes, sir.
And we are having adjustment. With 130, we need to add irrecoverable debt, and with the 72, we need to subtract irrecoverable debt. So plus 130 and minus 72. What is the figure? Can you calculate this?
Yes, sir.
1042.
Yes, sir. 1042.
And then we are having some prepaid expenses and accrued expenses as well. What are the prepaid expenses? 1000 rent expense should be credited with 1000. So what's the rent expense we have recorded here is 13,000 instead of 13. We need to record it by 12,000. How we have calculated 13 minus 1.
Yes, sir.
And for light and heat, we are having a crude of 460 as well. This means this 3074 should be added with the 460 more and then calculate the figure for light and heat. What is the correct figure? 3534.
Yes, sir.
Is it fine?
353. Yes, sir.
And we are having depreciation as well. So we need to record depreciation under the admin expenses as well. And for
Okay.
depreciation, we need to open another working tree. So we can open another working tree for the depreciation. So let's open another working for depreciation here. So working tree for depreciation. We are having three types of assets on which we need to charge depreciation: building, fixture and fittings, and motor vehicle. So building, fixture and fittings, and motor vehicle. And building, we know the cost of building. What is the cost of building? Building cost is 100,000. And the rate of depreciation is 2% straight line. This means we need to charge 2% straight line. What is 2% of 100,000? 2,000
2000.
is the depreciation for building.
Yes, sir.
For fixture and fittings, the rate is, there is no rate. We need to charge depreciation on 5 years life. So what is the cost? 28,000. Is that 5 years on life? Fixture and fitting straight line method, assuming a useful life of 5 years with no residual value. So what is the formula? Cost less residual value over useful life. So their cost is 28,000. So divided by 5, how much is that? 28,000 divided by 5, what is that?
5600.
So 5,600 is depreciation for that. For motor vehicle, it says 30%, but reducing balance method. Reducing balance means net book value. We need to charge 30% on net book value. How we can calculate net book value? Motor vehicle cost is 24,000 and its accumulated depreciation balance is 12,240. So we can calculate net book value. 24,000 minus what is the accumulated depreciation? 12240. So 12240, we will arrive at net book value, and on net book value, we need to charge 30% rate. So can you calculate this depreciation for me?
Yes, sir.
24,000 minus
Yes.
12240. And on that amount, you need to charge 30% rate.
So 3528.
3528. 3528. So what is the total depreciation? Expense for the year? 11128. Is that fine?
Yes, sir.
So this is the accumulated depreciation for the current year. What is the opening balance? I mean, this figure will go into profit and loss account. What is their opening balance of accumulated depreciation? We have opening balances as well. For building, we have opening balance of what? 6,000.
Yes, sir.
For fixture and fittings, we are having opening balance of 16,800. And for motor vehicle, we are having opening balance of 12240. Can we calculate a closing balance that we need to record in balance sheet? 2 plus 6 is equal to 8,000. 16,800 plus 5,600. Is equal to 2,2,400. And 1,2,2,40 plus 3,528. 1,5,768. So these balances we need to record in statement of financial position. But in profit and loss account, we need to chart deficit expense with the 1,128. So here we will record 1,128. Can you calculate admin expenses for me?
So can you repeat?
Can you calculate admin expenses for me? Wages, rent, motor expenses, insurance, light and heat, irrecoverable debt, and depreciation. Please give me the figure, total figure. 78344. 78344. So we will record these admin expenses in our profit and loss account. 78.
Yes, sir. 78344.
344.
Yes, sir. 78344. Yes, sir.
So we will deduct this and we will arrive at. Now we need to add if there is any other income. Is there any other income? Is there any other income? Yes, sundry income 1622. So we need to add this sundry income. One 622, 1662. 1622. And then we will arrive at, we can call it profit before interest and tax. Profit before interest and tax. In simple word, PBIT, profit before interest and tax. And this figure will be 24418. Then we need to subtract finance cost, also called interest expense. What is the interest expense? Is there any interest expense? Yes, bank overdraft interest of 74. So we will deduct this interest of 74. We will arrive at profit before tax, also called PBT, profit before tax. What is that figure? 24344. And then we need to deduct tax. What is the current year tax figure? Current year tax figure is a 7,300, but there is some under provision. Where is that under provision? 100. Whether we need to add under provision or we need to deduct under provision. We need to
add in the provision.
So tax expense will be 7,400. And we will arrive at profit after tax, also called PAT, profit for the year. What's that figure? 16944, and this figure will go into retained earning. But we are not only preparing profit and loss, we are preparing other comprehensive income as well. So we need to put a heading other comprehensive income. Comprehensive income. And there was a revaluation of land with 150,000. So we will record this as revaluation surplus. With 150,000, and then we will arrive at total comprehensive income. What's that figure? 166,944. So our statement of profit and loss and other comprehensive income has been completed. Now we are moving towards balance sheet. For balance sheet, non-current assets, and in non-current assets, we are having 4 types of assets. One is land, other is building, other is motor vehicle, and we are having fixture and fittings. Land, there is no depreciation on land, so its value has been added to 250,000. For building, we have calculated its cumulative depreciation. How much? 8,000. What was its cost? Building cost was 100,000. So 100,000 minus 8,000 accumulated depreciation. So for building, we need to record 100,000 minus 8,000 accumulated depreciation. It will be 92,000. Enough. It will be 92,000. And then what's the next asset? Fixture and fittings. And fixture, motor vehicles. For motor vehicles, we are having a cost. Motor vehicle cost is 24,000, but its accumulated depreciation balance is 15768. 24,000 minus 15768. So 24,000 minus cumulative depreciation 15768. So what is the total amount? 8232. And for fixture and fittings, we are having its cost 28,000, and its depreciation closing balance is 22,400. So 28,000 22,400. 28,000 minus 22,400. So it will become 5,600. So these are the non-current assets total. Can you make a total for these non-current assets?
Yes, sir.
355,832. 355,832. Now
Yes,
we
sir,
are moving
355,832.
towards current assets. In current assets, we know we are having a closing inventory. We are having a receivables. Was there any prepayments? Yes, prepaid rent, and we are having cash either in hand or at bank. What is the inventory figure? 25680. Inventory figure is 25680. And for receivables, we need to adjust balances. The receivable figure in the balance sheet is Where is the receivable figure in the balance sheet? There was receivables and payables combined. Yes, 177330. 177330. So 177330. But we need to subtract what 130 there was a confirmed bad debts, and 516 the closing balance of allowance that will be deducted from the receivable. So the amount will be 16,684. And what was the prepayments? The prepayments were 1,000. And is there any balance of cash available in the question? Yes, cash at bank 3312. So now we can make total of current assets. What's the total of current assets? It's a 46676. And what's the total assets? 402,508 will be the total assets that should be equal to equity and liabilities. Now we are moving towards equity and liabilities. In equity, we are having a share capital. We are having share capital in equity. What's the figure for share capital? 100,000. There is no issue of new shares during the year. This means this share capital will remain same as 100,000. There is no share premium. There is a revaluation surplus. Yes. And what was the revaluation surplus? 150,000. And there is a retained earning. There was an opening balance in which we need to adjust the current year profit. So what was the opening balance of retained earning? What was the opening balance of retained earning? The opening balance of retained earning was, where is retained earning, retained earning, retained earning, retained earning? Yes, 104,800. 104,800. 104,800, in which we need to add current year profit. Which profit? 16,944. So what is the calculated amount? 121,744. And from here we can calculate total equities. That will be 371,744. Is there any non-current liabilities in the question? Any non-current liabilities in the question?
Non-current liabilities.
Is there any non-current liabilities in the question? No, because this interest was on bank overdraft, and there is no non-current liability. So what are the current liabilities we are having? In current liabilities, we are having what? In current liabilities, we are having tax payable, we are having accrued expense. Is there any
Excuse me, sir.
payables? Yes.
Sir, the screen is frozen.
Still not working. I don't know what's the issue with my laptop or with the system. It's going to be stuck again and again. Come on. Okay. VV T43. I think it's asking for the break. Just give me 5 minutes so that we can complete balance sheet and then we will move towards break. Yeah, it's fine now. So is there any non-current liability? No, but there is current liability. What are the current liabilities? We are having payables. What are the payables figures? 23004. So we are having payables of 23004. Two, 3004, and we are having accrued expenses. How much is the accrued expenses? How much is the accrued expenses? 460. No, we need to record this under current liabilities. There was no non-current liabilities. So payables, accruals, and we have tax liability. Payable figure was, what was the payable figure? 23004, something like that. 23004
Two.
was.
Double.
23004. So 23004. Accruals were 460. And tax payable for the current year was 7300. So we can add these three and we will arrive at the figure 30764. And if we add both equity and liabilities, we will arrive the total figure of 402508, and this figure should be matched with this figure. This means our question is correct. So this is our statement of profit and loss account and other comprehensive income. And this is our balance sheet. But to arrive at this figure, we have to make some of the workings. And what was the working? This was working relating to cost of sale. This was the working relating to admin expenses. And this was the working relating to depreciation and closing accumulated depreciation. So let's take a break. You have to solve this question for 2 times by yourself, not one time, because first time you have to look back how we have calculated. But in the second time, you will be confidently attempting this question by your own. So let's take a
This
short
time,
break. After break, we will discuss another
yes, sir.
similar question.
Yes, sir.
Coming after 10 minutes, yeah.
Yes, sir.
Anne şey arayayım ya dur. Normal arayayım ya. Evet görüntü çekmiyor. Görüntüsüz arama. Hı. Anne efendim. Geliyor. Az geliyor. Yok okuldayım. 10'daki servise bineceğim. Onu bekliyorum. Ders çalışıyorum. Sen ne yapıyorsun? Hı? Canım sıkıntı arayayım mı dedin? Sesim kesik kesik geliyor. Hiç gelmiyor bile. Anne. Anne. Hı. Evet daha iyi. Bir dakika. Hi, can I use this one you made
Have a class here.
class? Yes, I have to go, right?
If you wanna sit quiet, that's fine.
Okay, okay, thank you so much.
Yes, Mr. Sargun, are you there? Mr. Sargun?
Oh, yes, sir.
Okay. Let's move towards another question. You have the solution of that question. So moving towards another question, test your understanding one. What we need to do? We need to prepare statement of profit or loss and other comprehensive income. We need to prepare statement of financial position, and we need to prepare statement of changes in equity. But we cannot prepare statement of financial position before statement of changes in equity. This means first we need to prepare statement of profit or loss. On second, we need to prepare statement of changes in equity, and then we will be able to prepare statement of financial position. So this is the question. So the trial balance of Penguin Company Unlimited Liability entity at 31st December 20x5 are as follows. Sale and purchase. So this is purchase, this is sale. Inventory at 31st December 20x5, and we need to prepare at 31st December 20x5. This means this inventory is closing or opening?
Opening.
No, at 31st December mean end of the year. This means this is
Closing.
closing inventory. And distribution cost, expense, admin expense, receivables and payables 20,000. Fundamental reorganization cost. These are other expenses that we need to mention separate. Cash at bank, current asset. Ordinary share capital is 8,000. And the price of one share is 5 cents. How many shares? Can you calculate shares?
Oh, yes, sir.
How many shares?
50. So 40. 40,000 for 4 lakh.
4 lakh. 400,000.
Oh, yes, sir.
10% irredeemable preference shares. Redeemable preference shares is a non-current liability. Irredeemable preference shares is part of equity. We have discussed this. Redeemable, that means we need to redeem, we need to pay back. If we need to pay back, that will be non-current liability. Irredeemable mean these will not be redeemed, these will not be paid back. So the things that we got, we never ever pay back, that will be part of equity. And 10% loan note, this is long-term liability, non-current liability. Non-current assets at carrying amount, mean asset less accumulated depreciation, they have calculated the net amount. Share premium account is having opening balance. Accumulated profit mean retained earning. This is what? Retained earning opening balance. Loan note interest paid mean finance charge. Preference dividend paid and interim ordinary dividend paid mean these two will come together as 2,500. Tax. What is that tax on credit side? What is this tax on credit side? What is this?
So it's income.
Tax income? Can
Uh,
we receive tax?
No, sir. So credit side taxes.
What is this tax?
So we save tax.
This is under or over provision of tax. In previous question, there was under provision. And that was on
What
debit
provision?
side. This is on credit side, that is over provision. This is over provision that we need to subtract from the current year tax liability. And then there is a suspense, like the balance of both sides doesn't tally and they have created a suspense account of 8,000. But to do with this suspense account, we will get some information. So sale, purchase, closing inventory, distribution cost, admin expense, receivables, payables, other expenses, cash, share capital opening balance, irredeemable preference shares, part of equity, long-term loan notes, non-current liability, non-current assets, net book values given, share premium opening balance, retained earning opening balance, interest expense, dividend paid, tax over provision, and suspense account. And there are some adjustments. A building whose carrying amount is currently 5,000 is to be revalued to 11,000. What is the revaluation surplus? What's the revaluation surplus?
6,000.
6,000, yes. That we need to record under other comprehensive income. And we need to record in statement of changes in equity, that is of 6,000. A final ordinary dividend of 10 cents per share is to be proposed. And regarding proposed dividend, we have discussed if it is approved by the management, then we need to record it into financial statement. If it is not approved or not paid, we do nothing for this. So there is no mention whether it is approved or not. So we will ignore it. The balance on the income tax account represent an over provision of tax for the year. Mean he has mentioned this was over provision. And tax for the current year is 3,000. So how much we need to charge in expense account? 3,000 minus 500, because over provision we need to deduct 2,500. And for current year liability side will be 3,000. And he has mentioned this is closing inventory. This means if 12,000 is closing inventory, this means then this will be opening inventory. This will be opening inventory. And the balance on the suspense account represent the proceed from the issue of 400,000 ordinary shares. Mean this 8,000 is relating to issue of shares. that has not been recorded. This 4,000 is relating to issue of shares. How many shares they have issued? How many shares they have issued? 400 shares, 4,000 shares they have issued. If the amount is 8,000 and they have issued 4,000 shares, can you calculate the price per share?
2.
2 per share is the price at which they have issued. What's the par value of share? Is 0.5. This means if they have issued at 2, they have issued at premium. You know?
Oh, yes, sir.
They have issued at premium. Can you calculate the amount of premium? I mean, what could be the accounting entry? Debit cash, 8,000. Credit share capital. How we can calculate share capital? 4,000 shares at the rate of 0.5 mean 2,000. So what could be the remaining 6,000 its share premium? How this has been calculated? 4,000 shares. And what's the premium? 2 minus 0.5, 1.5, and we have calculated 6,000. I mean, this suspense account of 8,000 is relating to this. I mean, these two things have not been recorded. This means we need to add 2,000 in share capital and we need to add 6,000 in share premium. Where? Statement of changes in equity. So let's move towards preparing our financial statements. Here we can prepare statement of profit and loss and other comprehensive income for the year ended 31st December 20x5. That will start from sales revenue. And sales revenue figure is 50,000. Then cost of sale. And cost of sale we can calculate directly here. The opening inventory is 8,000. Add purchases. We are having purchases. How much purchases? We are having purchases 20,000. And we are having closing inventory of 12,000. So we can calculate directly 28,000 minus 12,000 will be 16,000. If we subtract, we will arrive at 34,000 of
34,000
of gross profit. And we are having expenses, distribution cost 8,000, admin expenses 15,550. So distribution cost, that is of 8,000. And then administration expenses of 15,550. $15,550. I have done something wrong. Rosie. So 15,550 are the expenses. What are the other expenses available here? There is a fundamental reorganization cost, mean other expense. Fundamental reorganization cost. What was the amount? 2,400. What else? What are the other expenses? Nothing. We have interest expense. Where is interest expense? 800. So we can calculate profit before interest and tax. PBIT. What is PBIT figure? 8050, and interest expense figure is 800. If we subtract, we will arrive at profit before tax. What is profit before tax? 7250. Then tax, the liability for the current year is, how much is the liability for the current year? 3000, and there is over provision of 500. So 3000 minus 500 over provision, that will be 2500. We will arrive at profit after tax. What is the figure for profit after tax? 4750. Then we need to move towards other comprehensive income. And there is other comprehensive income of revaluation surplus. How much is that? 6000. So revaluation surplus of 6000. So we will arrive at total comprehensive income of 10750. So we have completed statement of profit and loss account and other comprehensive income. Now we are moving towards the next part, that is statement of changes in equity, or part 3. So we are going to prepare statement of changes in equity. And to prepare statement of changes in equity, we should make 4 columns. One for share capital, one for share premium, one for retained earning, and one for revaluation surplus. But in this question, we need to prepare one column for irredeemable preference shares as well. Share capital, irredeemable preference shares, share premium, retained earning, and revaluation surplus. Mean we need to prepare 5 columns. So one column is relating to, here we can prepare columns. This is relating to share capital, irredeemable preference shares, share premium, revaluation surplus, retained earnings, and total. So this column is for share capital. This is for share premium. This is for irredeemable preference shares. This is for revaluation surplus. This is for retained earning. And last column is for total. What we need to do, we need to record their opening balances. What is the opening balance of share capital? Share capital opening balance is 8000. Share premium opening balance is 3000. Retained earning opening balance is 3000. So 8000, 3000, and retained earning opening balance is 3000, and irredeemable preference shares opening balance is 9000. And we need to adjust what? First, we can adjust revaluation surplus. Revaluation surplus, there was a 6000 revaluation surplus that we need to record here. What was the total? 8311 plus 920, 23,000. And this 6,000 will come here, here, nothing, nothing, nothing. Profit for the year. What was the profit figure? It was 4750. So 4750 will be added in retained earning. If there will be loss, they will be deducted. Any dividend paid? Yes, dividend paid was 2,500. Dividend paid, how we have calculated 2,500? How we have calculated 2,500? 900 plus 1,600. So 2,500 will be deducted from retained earning. And then there was a share issue relating to this 8,000 suspense account, and we have calculated share capital 2,000 and share premium 6,000. So we will say share issue, and share issue 2,000 will come here, and share premium 6,000 will come here, total 8,000. And now we will arrive at closing balance of all these. So closing balance. 10,000 for share capital, 9,000 for share premium, 9,000 as it is for irredeemable preference shares, 6,000 for revaluation reserve. Can you calculate retained earning balance for me, please? Can you calculate retained earning balance for me, please?
So 5250.
5250. And the total 39250, and these balances 5 will go under equity in balance sheet. And this is how we prepare statement of changes in equity. The components of statement of changes in equity are share capital, share premium, revaluation surplus, and retained earnings. These are the normal components. This means we need to prepare column for each component. If there is irredeemable preference shares, we need to make a column for this as well. We need to record their opening balance. We need to record revaluation surplus in revaluation surplus only. Current year profit that has been calculated through profit and loss account should be added to retained earning. If there is a loss, that will be deducted. Dividend will be deducted from retained earning. And if there is any new share issue, that has been adjusted to share capital and share premium, like in case of any right issue or bonus issue, we will adjust here. And then the total of each column will go into balance sheet. Obviously, when we calculate the balance sheet total, it will come total equity as 39250. So now we can prepare balance sheet. Now we can prepare balance sheet. So here we're gonna prepare balance sheet. Statement of financial position. Assets first. Under assets, we are having non-current assets. What are the non-current assets? We are having a figure for non-current assets. We are having figure for non-current assets. What's the non-current asset figure? In the question, it's given. Where non-current assets at carrying amount of 35,000. But in this
So the
35,000, there is a revaluation as well. Screen has been struck again. Okay, so non-current assets figure is 35,000, but
38,000.
should be 6,000 revaluation that we need to adjust. So non-current assets, we can say property, plant and equipment is having 35,000, but we need to adjust revaluation surplus of 6,000. So they will become 41,000. And there is no other non-current assets, so we will move towards current assets. In current assets, we are having inventory, we are having receivable. I think there is no prepayments, no. And we are having a cash at bank or cash in hand. Is there any cash? Cash at bank, yes. So how much inventory we are having? 12,000. How much receivables we are having? Receivables of 10,000. How much cash at bank we are having? Cash at bank we are having 7250. So 7250 cash at bank, and total current assets will be 29250, and then we will be having total assets, and that will be 70250. Then we will move towards equity and liability side. Excuse me. And we will record equity first. And we know there are 5 components of equity in this question. That is share capital, that is share premium, that is irredeemable preference shares, in fact question says 10% irredeemable preference shares, and then revaluation surplus, and then retained earnings. And these figures we have already calculated. That's why we need to prepare statement of changes in equity first, then statement of financial position. So their figures are 10,000, 9,000, 9,000, 6,000, 5250. So 10,000, 9,000, 9,000, 6,000, and 5250, and these all will become total of statement of changes in equity 39250. 39250, and we need to record non-current liabilities, and there was a non-current liabilities that is relating to 10% loan note, and the amount for 10% loan note was we have moved towards we have moved towards next question, but 10% loan note amount was 8,000. So 8,000 is a loan note. And we are having current liabilities. In current liabilities, we know we are having payables. We know we are having a tax liability. I don't think so there is any accrued expense in this question. So what is the amount of payables? Payables are of 20,000, and tax liability for the current year is of 3,000. So payables are of 20,000 and tax liability is of 3,000, altogether 23,000. So we can calculate total equity and liabilities. And this total should be 70250. You see 39 plus 8, 47 plus 23, 70,000. That's it. So 70250 and 70250. This means we have prepared the balance sheet. We have prepared the statement of profit and loss account, and we have prepared statement of changes in equity. Is that fine?
Yes, sir.
We have completed this question as well. Now moving next, there is another question. Test your understanding to same figures. What you need to calculate, you need to calculate statement of profit or loss account, and you need to calculate statement of financial position. So we can discuss this question, but you will solve by yourself. We are just discussing what will be the effect of each accounting entry. But you will solve by yourself. That's okay. So we are having purchases, opening inventory, sales, distribution cost, admin and selling expenses, trade receivables, current assets, irrecoverable debt, expense, bank balance mean current asset cash at bank, capital account mean retained earning opening balance, discount received other income. Discount received other income mean before profit before interest and tax, we need to add 6% bank loan, non-current liability, non-current assets at carrying amount, like in previous question.
Sir,
Capital,
6%.
sorry,
Sorry,
non-current asset
6% bank loan.
is a non-current liability.
Okay.
6% bank loan, non-current liability.
Okay.
Capital introduced during the year. This means this amount you have to add with the opening capital. And loan interest paid interest drawings. This amount you have to subtract from the capital mean retained earning. This is the opening balance of retained earning.
Oh, yes, sir.
You will add introduced during the year and you will subtract drawings. And you can show under equity like this. So opening a capital, the figure was 73100. Addition, the figure was 5,000, and drawings 8,000 you need to subtract. Then profit for the year that you need to add, and then total equity will be calculated. Is that fine? Because there is no other share premium or revaluation, something like that. Trade payables, wages, expenses, and there is also a suspense account of 8,000. But this relate to, let's see in the adjustments. So any doubts in these amounts? Purchases, opening inventory, cost of sale, sales, distribution expenses, admin expenses, trade receivables, irrecoverable debt, expense,
Oh, no,
bank
sir.
balance, opening capital, discount received, other income that you need to add after deducting expenses, non-current liabilities, non-current assets, and these we have discussed. Closing inventory is a 12,000, should be deducted from cost of sale and recorded as current asset. Parole decide to write off an irrecoverable debt of 10,000. This is bad debts that should be added to this irrecoverable debt of, that should be added to this irrecoverable debt of, what is the amount of irrecoverable debt? That should be added to this 1550. Mean in expense we will record 1550 plus this 1000,2550. And this should be accounted for as an admin and selling expense. Mean you need to record this irrecoverable debt under admin and selling expense. Mean this 5600.
Sir, the whole 2550 or the 1000 only?
No, whole. Mean this, the available here, the opening balance of irrecoverable debt, 1550 plus this 1000. The total will be 2550. You have to add in admin and selling expense 5600. Is that fine?
Oh, yes, sir.
The wages cost should be split equally between cost of sale and admin and selling expenses. Mean half of the wages cost, mean this 15,000, half will be 7,500, should be recorded as a direct expense in cost of sale. And the half should be recorded as expense where 7,500 half will be recorded as admin and selling expense. Meanwhile, recording admin selling expense, you will record 5,600 plus 2,550 irrecoverable debt plus 7,500 wages. And while calculating cost of sale, what you need to do, opening inventory plus purchases plus direct expenses, wages. And then you need to subtract closing inventory. Then you will arrive at cost of sale. Is that fine? Can you understand this
Yes,
wages
sir.
inventory? The bank loan was taken out on 1st July 20x5. What's your year end? 30th June 20x7. When it will started 1st July 20x6. Mean this loan of 10,000 has been taken at 1st July. This means in the current year, we need to record interest for the complete year. What is the interest rate? 6%. So 10,000 is the amount of loan. 6% interest. What is the amount of interest?
The 300.
600.
Yes, sir, 600.
How much you have recorded interest paid?
300.
300. Mean 300 you have already paid. This will be recorded as expense.
Yes, sir.
But how much is the for total year? 600. This means
600.
300 you have paid. The remaining 300 is accrued expense.
So we have to pay it later on.
Yeah, this will be recorded as a liability, and the expense
Yes, sir.
you have to record with the 300 plus 300 mean with the 600 you have to record in profit and loss account. But
Sir, but
300
the 300 is accrued, so
what is the entry of accrued expense? Expense debit, accrued expense credit. So this 300 accrued will be recorded in liability, and expense debit will be added to profit and loss account. How much is already in profit and loss account? 300.
300.
So we need to record in profit and loss account what? 300 plus 300 mean 600. Mean expense for the current year is a 600. This means in profit and loss account 600 will goes. 300 plus 300 accrued. Mean 300 we have already paid and 300 accrued.
Yes, sir.
Mean in P&L we will need to record interest as 600. But under current liabilities, 300 will be recorded as accrued liability. Mean liability will be 300 and profit and loss account will show 600 complete, 300 already paid plus 300 this accrued. That we need to pay. Can you understand this concept?
Yes, sir.
Then he's saying the depreciation charge for the year of 5,000 on property, plant and equipment has yet been accounted for. I mean, there is depreciation of 5,000 that has not been recorded. And it should be classified as cost of sale. Mean we need to record this in cost of sale. So while calculating cost of sale, we need to add direct expense of depreciation as well, 5,000. So how we will calculate cost of sale for this question? The opening inventory is 10,000. Purchases are 60,000. There is a wages of 7,500. There is depreciation of 5,000. And then we need to record the closing inventory. And what the closing inventory figure? 12,000. That should be subtracted and we will arrive at cost of sale. 10 plus 60, 70, 77,500, 82,500 and 82,500. If you subtract the 1,200, that will become 69,500. And this depreciation we need to subtract from non-current assets as well. The non-current asset in the balance sheet will be recorded by subtracting this 5,000. How much will be that? I think so. 97,500. Yes. Is that fine? And then
Yes.
for this suspense account 8,000, there is an adjustment. The balance on the suspense account represent the proceed from the disposal of an item of property, plant and equipment. At the date of disposal, the item had a net carrying value of 10,000. The gain or loss on disposal should be accounted for as cost of sale. Mean company sold an asset with a carrying amount of 10,000 and their gain was not recorded. And their gain was not recorded. This means this entry has not been recorded. This means if we have sold an asset with 10,000, this means that 10,000 should be deducted from here. You know, if we deduct 10,000 from here, what could be the difference between these two amounts? The difference will be 2,000. What will be the 2,000? That will be the gain, not profit. We will call it gain on disposal. So what we need to do? We need to subtract this 10,000 from the asset. While recording in balance sheet, the asset will be 87,500. And this gain on disposal of 2,000, we need to record in profit and loss account as other income. In fact, other comprehensive income, we need to record this. Other comprehensive income. How we have calculated this 2,000 gain? There was a disposal of asset and the asset value was 10,000. That has not been recorded. Means there is no entry recorded for this. This means if we record this disposal, this means these assets will be down by 10,000. And if this debit side is down by 10,000, there will be a difference between debit and credit side of 2,000. Without recording, there's a difference of 8,000. But if we had recorded this 10,000 as reduction from the asset, then the difference between debit and credit side will be of 2,000. And this 2,000 is what? That is a gain on disposal that we need to record. So this 10,000 now we need to deduct from non-current assets in the balance sheet. Mean total non-current assets will be recorded as 87,500 instead of 97,500 because there was 5,000 depreciation that was not adjusted. And this gain on disposal we should record where? In other comprehensive income. So now you can prepare statement of profit and loss account and other comprehensive income, as well as you can prepare statement of financial position from this question. So I'm leaving this question on you. And you have to attempt these three
Yes,
questions
sir.
and you have to WhatsApp me the pictures of all these three questions,
Yes, sir.
please. That's it for today. There are some topics left in this chapter. One is IAS 10 and one is IFRS 15. Hopefully we will discuss these in next class.
Yes, sir.
See you next class then.